Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Happy Friday to you guys. It's May 18th here. Let's jump right into it because it's kind of actually a quiet news day today. There's nothing on the economic calendar to report today, so quiet on that end. So we will be taking our information actually for, well, the influence on the market will be from the geopolitical side. So I'm sure you can guess what that might be. Stock market is so far down this morning. But as I've been doing this, the Dow's been kind of starting to ease into positive territory, so it's starting to turn mixed at the moment. And of course, as you probably guessed, it's geopolitical. China. We've been in the second round of negotiations. Uh, President Trump sent out a tweet apparently saying that China's been spoiled for so long that things aren't going as well as initially planned or hoped for. So nothing really seems to be it doesn't seem like there's been any real progress as of yet. So I think that's what the investors are concerned about, and that maybe this could escalate into something a little bit more serious or into maybe the tariffs that we initially were concerned about. So maybe their worst case scenario may happen. So that's what the concern is. But also, on the other hand, we also got rates rising and yields rising. So, and we'll touch on that in a moment. But that also will affect the stock market as well. So let's see here how the bond market is reacting. Yesterday we were testing, as we've been kind of testing this floor of support for the last 2 days, even testing the second day floor of support, and then we end up landing right on that first level floor of support. That gave us a good little bit of a bounce back and helped us out today. So right now we're up about 27 basis points, which translates to an improvement in our rates today. Another nice thing about this is that we had a positive stochastic crossover, which usually kind of is a sign that we will improve on this type of thing. So in this scenario, it did work out to our benefit. So it worked out where bond prices are moving up. We have plenty of room here, as you can see here, over 50 basis points to get improvement. So that'd be almost a half a point in the rate. Fees for a rate to be able to get in. That's probably a good point or quarter to the interest rate here. What you're looking at. So here's the yields. Yields are down as well, which has been putting pressure on there. It had a negative stochastic crossover, so we don't know how far it can come down, but it looks like it could potentially test this 3.04. If it doesn't hold, obviously we got a lot further down to reach the 25-day moving average, which is only help out bond market that much greater. So again, let's see how this plays out. But right now, the yields are down from 3.11 down to 3.7 or 3.07. So 3.11 down 4 points right now. Again, that's helping mortgage-backed securities and helping out interest rates today. So if you guys are out there, if you haven't locked in or anything, you're in a transaction, you might want to wait a little bit to see how much of an improvement we get before we go ahead and reverse course or could change. But for the time being, I would kind of float a little bit and see how things make up some of the losses that we've incurred over the past week or so. All right, folks, that pretty much wraps things up. If you guys want to get more data, just come over to Twitter. You can find me at Mike Bjork on Twitter. I do, again, post throughout the day there. If you want to get more information from market days or how it closes, if you're curious, just come over to Twitter and find me at Mike Bjork. Otherwise, enjoy the rest of your day. Enjoy your weekend. We'll look forward to see you guys on Monday. Take care.